Real estate professionals frequently encounter a myriad of inquiries daily. The inquisitive nature of individuals is a given, and real estate agents play a pivotal role in navigating them through the intricate process of purchasing and selling properties. It's easy to assume that certain real estate queries are more common. For those embarking on their initial property purchase or seasoned buyers needing a brief update on the transactional intricacies, here are insights into the most frequently asked questions. 1. What is the first step of the home buying process? Securing a mortgage pre-approval is the initial stride in the journey of home purchasing. Obtaining this pre-approval letter sets your property search moving forward effectively. Here's the rationale. Firstly, understanding your borrowing limit is crucial. Recognizing your affordable housing budget refines your online property hunt to viable options, ensuring you don't squander time on houses beyond your financial reach. This step also avoids the heartache of setting your heart on homes that are financially out of reach. Secondly, your lender's loan estimate will reveal the necessary funds for a down payment and closing costs. This might mean you need additional time to save, liquidate other assets, or possibly seek out mortgage assistance from relatives. Ultimately, you'll gain a transparent understanding of your financial obligations. Lastly, a mortgage pre-approval signals your earnest intent in the property market, both to your real estate agent and the home seller. Most agents insist on pre-approval before showcasing homes, a practice even more prevalent in the luxury real estate sector. High-end property sellers usually permit only pre-validated buyers to tour their homes, filtering out casual browsers and safeguarding the seller's privacy. Furthermore, this limitation enhances security against potential thieves casing the property for valuables like sophisticated security systems or high-end art. Before we delve further, if you find this discussion enlightening and seek more insights like these, do consider subscribing to our channel. Stay updated and better informed with our upcoming videos on real estate. Let's continue our exploration of real estate queries. 2. How long does it take to buy a home? The entire home buying journey, from initial online browsing to the final closing of escrow, typically spans 10 to 12 weeks. Once you've chosen a house and your offer is accepted, the escrow phase usually lasts 30 to 45 days under regular market conditions. However, home buyers with ready cash and meticulous preparation can sometimes expedite this process. The pace at which homes are sold heavily depends on market conditions. In bustling markets with heightened sales activity, the purchase process might extend slightly beyond the norm. This delay arises because various parties in the transaction experience a backlog when there's a surge in business. For instance, a boost in home sales heightens the need for property appraisals and home inspections, yet the number of available appraisers and inspectors doesn't increase correspondingly. The turnaround times for loan underwriting by lenders can also decelerate. If each involved entity takes an additional day or two to complete their tasks, it elongates the overall timeline of the home buying process. 3. What is a seller's market? In a seller's market, the escalating demand for properties often leads to a rise in prices. Various factors contribute to this heightened demand. Economic elements: a robust local job market attracts new residents, driving up housing prices before additional properties can be developed. Declining interest rates enhance housing affordability, spurring interest among buyers, especially first-timers who now have the means for larger homes as borrowing costs decrease. A brief surge in interest rates can prompt hesitant buyers to act, especially if they anticipate a continued upward trend. These buyers aim to secure a property before their borrowing power diminishes. Limited property availability stems from a shortfall in new housing developments. The scarcity of available homes naturally drives up the prices of existing properties due to the reduced supply. 4. What is a buyer's market? A buyer's market is defined by falling property prices and a decrease in demand. Various factors can influence buyer demand in the short and long term, such as economic downturns, for example, a major employer ceasing operations and laying off workers. Rising interest rates, higher borrowing costs mean people can afford less, shrinking the pool of potential buyers. This reduction in demand leads to lower home prices, presenting buyers with more attractive deals. Temporary reductions in interest rates can briefly enhance buyers' purchasing power before property prices adjust to the recent changes in interest rates. An abundance of properties: the introduction of new housing development, for example, can exert downward pressure on the prices of older properties in the area, especially if they don't have sought-after features like modern appliances. Natural disasters: events like earthquakes or floods can significantly decrease property values in the affected areas. 5. What is a stratified market? In a stratified market, the dynamics of supply and demand vary within the same geographical area, often differentiated by price segments, usually observed within a city. For instance, property sales for homes valued over $1.5 million might be robust, indicating a seller's market, while those priced below $750,000 could experience slower movement, suggesting a buyer's market. This situation occasionally emerges in West Coast cities, where international investors seeking to invest in U.S. real estate often opt for high-end properties. Concurrently, the market activity for moderately priced homes can exhibit a completely different trend. 6. How much do I have to pay an agent to help me buy a house? Home buyers typically incur minimal or no costs when employing an agent to purchase a home. Here's the explanation. In most property transactions, two real estate agents are involved, one representing the seller and the other the buyer. Agents for sellers, known as listing brokers, are responsible for representing the seller and marketing the property. This marketing might encompass various advertising efforts like radio segments, print and television advertisements, and online promotions. Additionally, they list the property on the local multiple listing service, MLS, making it accessible for other agents, both locally and nationwide, to find and showcase the property. Buyers' agents, who represent the homebuyers, receive their compensation from the listing broker. This happens when a home is sold, and the listing broker shares the listing fee with the buyer's agent. Consequently, the buyer does not have to pay their agent directly. 7. What kind of credit score do I need to buy a home? The majority of loan schemes necessitate a FICO score of 620 or above. Applicants with superior credit scores are perceived as lower risks by lenders, frequently leading to reduced down payment demands and more favorable interest rates. On the other hand, potential home buyers with lower credit scores might have to contribute a larger down payment or agree to a higher interest rate to balance out the risk for the lender. 8. How much do I need for a down payment? The nationwide average for down payments stands at 11%, encompassing both first-time and returning buyers. However, this figure deserves a more detailed examination. Although the general average for down payments is 11%, first-time homebuyers often put down just 3 to 5% on a property. This is due to the availability of numerous first-time buyer programs that don't necessitate large down payments. A well-known option, the FHA loan, requires a down payment of just 3.5%. Additionally, some of these programs permit contributions towards the down payment from family members as gifts. Certain programs demand even lower down payments. VA loans and USDA loans can be obtained without any down payment, though they have stricter eligibility criteria. VA loans are exclusively for veterans or active military members, while USDA loans are aimed at buyers with low to medium income in USDA-designated rural areas. Traditionally, conventional loans require a 20% down payment. These loans were generally favored by repeat buyers who could leverage the equity from their current homes for the down payment. However, recent conventional loan options now offer as low as 3% down, provided the borrower agrees to carry private mortgage insurance, PMI. 9. Should I sell my current home before buying a new one? Should you plan to use the equity accumulated in your existing home as a down payment for a new one, it's generally necessary to sell the former property first. Alternatively, some buyers opt to convert their current home into a rental property, meaning it doesn't need to be sold. In such instances, though, your loan advisor will still assess your financial risk and credit history to decide if you qualify for a mortgage on a new home while keeping ownership of the previous one. Those relocating to another city, often due to job transfers, usually face a tight timeline to sell their existing home. If you're relocating but remain with the same employer, it's worthwhile to explore whether they provide relocation assistance, which can help cover some of your moving expenses. 10. How many homes should I view before buying one? The decision is yours. Undoubtedly, the process of searching for homes in the current era is more straightforward than ever. The capability to browse properties online and view photos from the convenience of your living room has revolutionized the home purchasing experience. The ease of house hunting has reached unprecedented levels. However, the importance of physically visiting a home to experience its appearance and ambiance firsthand remains unparalleled. 11. What is earnest money? When you place an offer on a property, your real estate agent will typically request a check to go with it, since checks are considered equivalent to cash. This deposit, commonly 1% to 2% of the property's purchase price, is known as earnest money. It's a good faith gesture, showing the seller that your offer is sincere. Essentially, earnest money reserves the house for you, taking it off the market for other potential buyers. This check, or occasionally cash, is held in a trust or escrow account for safekeeping. If the transaction proceeds successfully, this earnest money is then allocated towards your down payment and closing expenses. Should the deal not materialize, the funds will be returned to you. However, it's crucial to understand that if both parties agree on the deal's terms and the buyer later withdraws, the earnest money might not be refunded. It's advisable to discuss with your agent how to safeguard your earnest money, including possible offer contingencies. 12. How long can the seller take to respond to my offer? Formal offers ought to specify the period within which the seller is expected to reply. Allotting a 24-hour window is generally adequate for this purpose. 13. What if my offer is rejected? Sellers have the option to outright accept or decline an initial proposal. However, there's a commonly used third option: they can present a counteroffer. It's important to remember that a transaction isn't over until it's conclusively off the table. So, if you receive a counteroffer from the seller, you're still actively engaged in negotiations. You and your real estate agent should then assess the counteroffer to see if it's agreeable. If it meets your terms, accepting it can immediately finalize the deal. It's quite normal for offers and counteroffers to be exchanged multiple times. This is a standard part of the negotiation process that realtors handle routinely. Each adjustment is aimed at bringing both parties closer to an agreement on the deal's terms. 14. Should I order a home inspection? Indeed, home inspections are mandatory if you intend to finance your purchase with an FHA or VA loan. For other mortgage plans, such inspections aren't a requirement. Nonetheless, getting a home inspection is strongly advised as it can uncover hidden issues in the property that aren't immediately apparent. Conducting a home inspection offers reassurance in what is often one of the most significant investments you'll make in your life. 15. Do I need to do a final walkthrough? While not obligatory, it's highly advisable to conduct a final walkthrough. This allows buyers to confirm that the property remains in the same condition as when they first viewed it. Additionally, if the offer included requests for repairs, a subsequent visit provides an opportunity to verify that all is in order and aligns with the contractual terms. As we wrap up our insightful journey through these key real estate questions, we hope you've gained valuable knowledge and clarity. Understanding the nuances of property buying, selling, and financing is crucial in making informed decisions in the real estate world. If you're keen on diving deeper and expanding your understanding, our next video on real estate principles is the perfect next step. It delves into the foundational concepts and practices that underpin the real estate industry, offering a comprehensive guide for anyone interested in this field. So, if you're looking to build upon what you've learned today or deepen your real estate knowledge, simply click on the video appearing on the screen. Thank you for joining us, and we look forward to continuing this learning journey with you.